Given what happened to Troika Media Group stock in the aftermarket on Thursday, it looks like there's a real possibility of this stock exploding when trading gets underway on Monday.
Send it to the frickin' moon, idiot.
Hi again, everyone. I hope you're all doing really well. So, Troika Media Group, ticker symbol TRKA, experienced some sharp upward movement during the aftermarket on Thursday, rising by about 20% in the low volume session. This has led to a bit of speculation over the long weekend as to whether we are witnessing the start of another retail effort to squeeze institutional short positions in the stock. Troika Media has been a popular stock among retail investors in recent months, and there are several reasons why it may be setting up for another short squeeze. First of all, Troika has a relatively high short interest, with around 12% of its shares sold short as of February 28th, according to the latest data from MarketBeat. This means that there are a significant number of investors who have bet against the stock, and if Troika's share price were to rise sharply, those investors could be forced to cover their short positions, which would drive the price even higher. So firstly, it's important to understand what a short squeeze is. Short squeeze occurs when a heavily shorted stock experiences a rapid price increase, which forces short sellers to buy shares to cover their positions, creating a buying frenzy that drives the stock price up even further. This can create a self-fulfilling cycle as more short sellers are forced to cover their positions, leading to an upward pressure on the stock. And perhaps because of what happened on Thursday afternoon, this might be what the market might experience on Monday, as these short positions have had to hold over the weekend, which incurs an interest cost. So now let's look at the specific factors that could potentially lead to another short squeeze with Troika Media stock. One of the key drivers of the recent rally in Troika's stock price was a significant retail investor interest. This led to a short squeeze given that a large percentage of its shares were sold short by institutional traders as of the 28th of February, like we've already said, which was 21.47 million shares of Troika were sold short with a combined value of 8.43 million, which is equivalent to a short interest as a percentage of the float of 11.9%. Putting it well above that 10% mark. Typically, a stock with a short interest above 10% is considered relatively high and raises the possibility of another short squeeze. With Troika's short interest currently standing at nearly 12%, this could create a significant opportunity for another short squeeze if the stock experiences any kind of positive news or catalyst. One potential catalyst for another short squeeze in Troika could be the recent announcement by Genius Group that they have offered to acquire the company. While the news has not yet been fully confirmed or finalized, the possibility of a merger or acquisition could create excitement among investors and potentially drive up the stock price even further and triggering the short squeeze. Additionally, Troika's recent financial results have been somewhat mixed. While the company reported record revenue of $187.9 million for the 6 months that ended on the 31st of December 2022, its operating loss and net loss widened by 155.5% and 53.3% respectively from the year ago value to 19.36 million and 9.58 million respectively. So while this may seem like negative news for Troika, it's worth noting that heavily shorted stocks can often experience short squeezes even on negative news. I know it's kind of crazy. This is because short sellers may have already priced in the negative news, and any unexpected positive news can catch them off guard and force them to cover their positions, leading to a short squeeze. And if you look at the spike the stock experienced in the aftermarket on Friday, perhaps we're looking at the latest effort to drive up the price and squeeze out some of the short positions, or perhaps there might even be some sort of catalyst coming which could trigger a fully fledged short squeeze. We'll have to see. So in summary, there are several factors that could potentially lead to another short squeeze in Troika Media Group, I believe. These include the stock's high short interest, the potential for a merger or acquisition with Genius Group, and the potential for unexpected positive news to catch sellers off guard given what happened in the aftermarket on Thursday. However, it's important to note that short squeezes can be unpredictable and volatile, and investors should always approach them with caution and carefully consider their risk tolerance before making any investment decisions. Anyway, what are your thoughts on the stock at the moment? Are we looking at another short squeeze effort about to launch on Monday, or was Friday's aftermarket jump a mere blip on the radar of this stock story for 2023? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favor. Cheers.